Today I'm with Robert Roy from Wealth Builders HQ. This guy has a wild origin story. Back in the late 1990s, one of his best factory workers walks into his office and says, "Boss, I'm going to quit. I'm making more money trading options on my lunch break." Most people would have just laughed. Rob didn't. He said, "Where'd you learn how to do that?" A few weeks later, he took the training. 6 months later, Rob quit his job and went full-time trading. In this episode, we talk about the real stuff, how trading worked back then, dial-up internet, how we used to pay big commissions for slow fills. We also talk about pain, a massive $50,000 loss that crushed him, and how he rebuilt from it. Here's my conversation with Robert Roy. All right, I'm here with Robert Roy from Wealth Builders HQ. Nice to have you, Robert. I really appreciate you being here today.
Thanks, Eddie. It's great to be here. I appreciate it.
You got it. Now, before we get into your trading strategies, I want to hear your story. Like, how did you get into trading? And then I also have another question kind of related to that when you're done. Go ahead.
So back in 1997, I was in manufacturing, and I had a guy that worked for me on the line in a factory, and he comes in my office, one of the best workers I've ever had. His name is Mike. Comes in my office and says, "Listen, boss, broken English, I've got to quit. I'm losing money working here." I said, "Mike, I don't want you to quit. I'll get you a raise." He goes, No. I'm trading the stock market. I'm trading the stock market. I took a class on how to trade the stock market. We start talking back and forth about it. And I said, okay, I fully understand. He was trading options. He was making money, and he was doing it, while he's at work, part-time at his lunchtime is all he was doing.
Oh.
So I said, great, but your wife works here too. Is she going to continue to work here? He goes, no. She's in her boss's office now telling her that she quits too. So before he left, I said, listen, give me the name of the company that you went to. Cause I'm thinking to myself, if it took this guy 6 months, I need like 3 days. I got an education. I'm a manager. I'm all about this. I can figure this stuff out. And he did. And I went to that training, and within a few months, I was able to leave the job and go full-time in trading.
Wow. Who was training you? Because there was a lot of kind of nonsense about the stock market back then.
I got very fortunate. I went to Wade Cook was the training that I took.
I remember the name.
Yeah. It was a big company. He had 400 employees. I taught for them at one point, but they had 400 employees there. So they were big. But I met someone there that was a genius when it came to stocks. He was a little bit older, couldn't figure the options out, which is what he came for. And he taught me trading from the technical standpoint right on the spot. We stayed friends until the day he passed 2 years later.
Wow. Okay. And so you learned how to trade. How long did that take you from that class until you quit your job? What'd you say?
So I quit my job in 6 months.
Wow. That is remarkable. And then you went full on, you're a day trader now.
Actually, was a swing trader at that point. I hated day trading. I couldn't stand it. It was too high risk, too fast. Today, it's a different story for me. I love it. But back then, monthly options only. We're talking 1997. So there were no weeklies available. Options.
You went right into options trading?
Yes, that's what the whole training was about, was options.
Oh, okay. Wow. So 1997 was when the internet stocks, you added a .com to the end of your company name and your stock tripled.
Yep.
I was a stockbroker during that era. It was a remarkable time. You think we're having a bull run now? You ain't seen nothing. That's how fast some of the smaller caps and the mid caps ran. It was just absolutely unbelievable period. So how were you placing these trades back then? Were you doing it online? There weren't too many online brokers back then.
There weren't. There was at first I was using Merrill Lynch, and I remember my very first options trade, which, to put some context to it, I'm a systems guy. So when it came down to I want to place a trade, I didn't have a lot to start with. I just dropped $6,000. So the very first trade I placed was the Merrill Lynch. I made the decision. I picked the stock. I picked the option. I did everything, and it cost me $200 for 10 contracts to open the trade.
Like this. That's what I would have charged you too back then when I was a broker. I mean, as much as we could get away with.
Of course, listen, it was an open field. It made sense, especially with the up and coming of all the information of stock market and all the new traders coming out there. It made sense to do it. I don't blame them one bit. But then there was an online company. It was Wall Street something, I forget. And you could log from your computer. You could dial up to the internet, 56K, right? Dial up to the internet. You would put your order in, and it would dial in. You'd get the squelch. For those of you that know what I'm talking about,
Yep.
that sound.
Yep.
It would
You've
connect.
got- oh,
Right. It would upload your order, and then it would disconnect. And if you wanted to see what happened, you would reconnect. It would download the data of what's going on in your account and disconnect. And it would just do this all day long, back and forth, as often as you wanted to get
interesting.
on. It was
Wow.
awesome compared to what we had, which was 2
Yeah.
hours later, Merrill Lynch, did I get filled? And they're like, I have no idea. It's only been 2 hours. You know?
It's in '97. I worked at Joseph Thal and Company,
Okay.
and as a stockbroker, we were still writing tickets by hand and giving them to a window to somebody to wire them up to New York, and it'd take 2-3 minutes to get an execution. The market was always the worst fill you can imagine. It was
Sure.
always like so far away. There was a market maker with his hand out. The spreads were much bigger. Everything was in fractions. So just the fact that you found an online broker back then where you could actually do that, it's amazing. But what about quotes? Were you able to get quotes? Because we were the gatekeepers of the data, where people had to call us to know what was going on with their stocks.
Right. So I used a program called TC2000 at that time,
Huh.
Telechart 2000. Same thing. You could upload into it, get the data, disconnect, and you would get a current price. But the Wall Street broker was able to do that. And then I ultimately switched over to TradeStation, who I've now
Okay.
been with since then. And I switched over
Me
to
too.
TradeStation. Yeah, and they're one of the brokers. I use others as well, but
I
TradeStation's
think
one of them.
99 was when I first opened my account, and it's open on this machine behind me in addition to TradingView.
There you go. There you go. Yeah, and I've got TOS and some of the others like that as well. And then the longer term stuff we do, 401ks and that. But but then I switched to TradeStation, things became easier, but the quotes would still come from this Wall Street brokerage firm, but you had to upload to get what you wanted, and it would disconnect and give you a quote.
Okay. So it could be a little delayed. Obviously, the numbers weren't changing in real time,
Right.
but
It's
it was
not like
better than having to call Merrill, getting jacked for $200 on like a market order, and then getting the worst fill in the world.
Exactly. It's not like today where we talk about how many feet of cable it is from the broker to the
Yeah.
exchange. This was, you were stuck, and there was no ifs, ands, or buts. You played that game whether you wanted to or not.
Right. Exactly. There was no choice.
Right.
If you've ever heard of, if you've ever read about Jesse Livermore,
Mm-hmm.
who started in bucket shops in the 1880s. And then when he started to actually trade the real New York Stock Exchange market, his executions would take a half hour. Because back then, there was no technology
Right.
to get an order in. And so there were a couple of panics, like the one in 1903 or 4, where it took him hours and hours to get executions. And he got blown out in one of the panics because his executions were many dollars away from the market. I mean, it's the most extreme form of slippage ever. So if you've ever, there's a book called Reminiscence of a Stock Operator, great historical book about the stock market. And this guy, Jesse Livermore, I do recommend everybody read that. Sorry to get away.
That's okay. It's
just
a great book. It's in my library. It has been for years.
Awesome. So I was reading about you, and it sounds like you grew up with some limiting beliefs about money. Can you tell us about that?
Amen to that. Parents got divorced when I was young. I was 11 years old. I became, an 18-year-old overnight, right? Fixing the house, and my mom owned the house. Fixing the house and whatever had to be done there. Dad became very distant, moved away. And I had been told my whole life that, listen, you got no money, you got nothing, you're not a smart kid, which I wasn't. I was a C student. You're pretty much stuck. We are. And, you just go find a job, get paid by the hour, work hard, put in a lot of overtime, and, maybe you'll be able to afford a decent car someday. It was very limiting beliefs my entire life.
Wow.
With growing up as a young boy and even into a young man.
Wow. So how did that affect like your career?
So I got fortunate By the time I hit 18 years old, I had started a construction company. I was really good with my hands. I won all kinds of awards in school for industrial arts. So I was a contractor, right? And
Well, the limiting belief doesn't seem to have applied right there.
well, I've always been the
18 years old,
entrepreneur.
that takes guts, man.
Yeah, I've always been the entrepreneur, I guess. It's just I've always been told I won't be or I can't be. So that's what was holding me back. But I started the contracting company. My dad hooked me up with a guy that was a contractor out in the Hamptons, which, if you're familiar, is a very exclusive area out east. I know you are familiar with it.
Yep.
And
On
the
the
guy built
eastern
houses
tip of
out
Long
there.
Island.
What's that?
It's the playground for the hedge fund managers. A lot of money out on eastern Long Island,
Right.
the Hamptons.
Beautiful area. Absolutely gorgeous. So he was able to train me on the things to do, how to run a business, and so forth. So that propelled from there. But I didn't want to run a company any longer. I became a babysitter. My contractor didn't show up. I'm out on the road being a helper to one of my guys. It was crazy. So I wound up going to work in manufacturing. I got a good job. Same limiting beliefs there. You do not have a college degree, so you're never going to get anywhere here. You're going to be a middle manager, and that's the extent of it. And it's everywhere you seem to go, people do that, where they tell you cannot do it.
Wow. Babysitting also. That's kind of part of being in business anyway, isn't it?
It is. So my company with Wealth Builders, I'm very much about empowering the people to do what they need to do. I'd rather you make a mistake by trying it than not doing anything and a customer's angry, something falls apart. We're running ads and nothing's working. We're spending money on something and it's just not what we need to do. Make a decision. I'm very much about empowering people to do what they need to.
Awesome. I mean, you have to. I mean, 85% done by somebody else is 100% better than doing it yourself. That's what I've learned in being an entrepreneur myself.
I agree.
So, okay. So you started trading options. You had this mentor. You guy taught you the market. Then you had Wade Cook. The options program there apparently made some sense to you. What was it like in the beginning in terms of profit and loss and kind of learning? Because trading isn't always about the strategy, is it?
It's not. So I'm a systems guy, as I started to say before, and I had to come up with a plan on how I'm going to go and execute trades and actually get to a point of putting money in since I didn't have a lot to start with. So I determined that I was going to do 10 non-funded, 10 paper trades a day for 30 trading days in a row before ever putting one penny of real money into the market. And I'm doing all of this under duress. And what I mean by that is my wife was not a happy camper when she found out what I spent on Wade Cook. She was much more unhappy when she found out what I spent while I was there on tools and wasn't talking with me.
How much did you spend?
It was $6,000 at the $6,000 to go to the event, and I spent another $6,000 or $7,000 while I was there. And we're talking 1997 numbers.
Yeah.
Right.
So maybe, multiply times 5 or add a 0.
And we were massively in debt, but I saw this as an opportunity to change my life. And I just went full bore at it. And my wife, I would write one trade would be written out on one piece of paper. That's how I did it, in a binder. There were no Excel spreadsheets and programs and paper trading accounts. You didn't have that stuff. You did it on paper. And she comes down one day. We haven't spoken probably 2 weeks. And she's looking over my shoulder and she says, "What is that?" First word she says to me. So she turns the page. She goes, "You made $200 on this?" Uh-huh. Turns the page. "You made $1,000 on that one?" Yep. Turns the page. "You lost $400 on that?" Yeah. One more. She goes, "You made $3,000 on that?" I said, "Yeah." She goes, "Why aren't you doing it for real? Get the money back that you just spent." I'm like, oh my God, she's mad at me again. I can't win. But
that's part of being married.
Well, and that's fine. Listen, we have a great relationship and that's all good. This was part of it that we had to grow through together because each of us have our own path of what we're going to do, right? Each person grows differently. And then I placed my first funded trade. That was my $200, 10 contracts with Merrill Lynch, palms sweating, to the point that my wife said, "Why don't you give me the phone and tell me what to say and I'll do it for you?" Oh, great. That's what I need, right? Yeah. She just wanted me trading. She saw what the results were on paper and she wanted me trading. And then I was trading all the hot stocks at the time, the JDSU, just don't sell us, right?
Yep.
The
Qualcomm.
Cienas and the Rambuses and whoever, Qualcomms, whoever was rocking and rolling, that's who we were trading.
Yeah, I remember that time. That was a crazy, crazy time. So at some point, you must have gotten knocked over the head with a loss.
Yeah. And it was a double whammy. So I'm a very big proponent and teach my students that when you place a trade, you read it out loud. Because if you don't, and if you're just reading it on the screen, you're seeing it with your eyes. You're using one sense only. If you speak it out loud, you're seeing it, you're hearing it, and you're saying it. You have three senses. And I'm half Italian, so I'm moving my hands. That's another sense as well, right?
Right.
So when you read the screen and it says buy to open 100, 100 contracts. No. I made a mistake. I only want 10. Well, I didn't do that then. And I placed a much larger trade that I wanted to in a market that was bullish and rocking and rolling in the end of 2000 on Sienna. And within 4 days, Sienna went from, I don't know what it was, 150 down to 85. And it was a $50,000 hit at that time. It was the biggest trade I've ever had go against me was Sienna.
Right. How'd you deal with that?
Crushing. I didn't trade for a month. It was, I tell people all the time, if you ever lose $50,000, you find out you just lost that in the market. If you are anywhere other than crossing the street or driving your car, lie down because you're going to be on the ground sooner than you think. Just get there now because you will not have any strength in your legs again at all.
That's debilitating. That's how hard it hit you.
It was rough. And it took a lot of work to come back from that. A lot of practice trades, a lot of building up confidence, a lot of one contract trades.
So was the mistake that you accidentally put in a trade that was too big, or what was the mistake?
So the trade was too big. But at that point, I saw it and I could have gotten out of it. I could have closed some of those contracts out. And I said, listen, even if the market goes down tomorrow, it goes back up the day after. It always does. No, this was 4 days in a row when the market just crashed. The market just plummeted. It was, for some reason, I think it was October of 2020. But I don't remember the exact month. I try to put that.
Well, I mean, that crash started in March of 2000, and it didn't find its bottom till March of 03.
Right.
So, and just for context, people watching, the NASDAQ dropped 80% from the high to the low. And it banged along a bottom for, I want to say, a year and a half, maybe. That was brutal, man. I was a stockbroker, and it was brutal. I guess that's the best way.
It was a tough market. It was a tough market. Tough to be a stockbroker.
So what was the biggest lesson for you from that event?
From that was when I started to now read it out loud. All of the orders. To this day, my wife's a teacher, so she has the summers off. She's got people come in the house all the time. I'm in my office trading. It's very hot in my office with 10 monitors. Look who I'm talking to, right? I got 3 computers. And
I got a fan right here. I got the ceiling fan on.
Yep.
I got the light right here. It gets warm in here.
We built my office with a double AC system in it, 2 individual vents coming in because we knew how hot it was going to be.
So I have 2 vents also. I'm in Florida. I needed the 2 vents. Still doesn't work that great.
It doesn't help. Yeah, not if the door is closed. It's very bad. So I keep my door open.
Yeah.
She'll be in the kitchen, and it's been quiet in my office. And all of a sudden, her friend will say, "Is somebody in Rob's office?" Yeah, it's Rob. Who's he talking to? Is someone in there with him? No, he's trading, and it's just me talking it out loud. I'm not worried about what other people hear or think, I'm not an individual that cares what people think of me, like me or not. I really don't care. I am who I am, and I wasn't put here to please any one individual on this earth. So, I'm going to be me. And it's funny. They're laughing. Her and her friends are laughing inside at me as I'm making comments, especially when I say, a trade of, okay, we're doing 10 contracts on this naked put. And you hear the friend yell, naked. What the heck is going on in there?
So it sounds like this is like a psychological tool for yourself that it changed your perspective. Are you really into trading psychology?
I am.
So
Mindset is all.
Okay, let's talk about that. How do you develop the mindset for trading? What is it for you? What's like the key? It's about speaking out loud is obviously part of it. There's something going on psychologically there for you personally.
Correct. So I'm a very big believer that I need to trust my system. I need to look at that trade and say, I am taking this trade now, not saying, I hope this one works, or I wonder if this one's going to work out, because it doesn't matter. If I have a 78% win rate or a 62% or 94%, doesn't matter. If I have let's just call it 70 to do easy math, it means I'm going to win on 70 out of 100 trades. That means 30 trades are going against me. But we did not lose money on those trades. They are lessons. They are not losing. Don't look at loss, look at cost. You go to the store to buy lunch, you didn't lose $14 on that sandwich. It cost you $14. It's a
I like
cost
that
of doing
analogy.
business. And that's the way I look at everything when it comes to trading. So I had to be able to trust my system. So when I developed my very first trading system, it was made of 4 components. Simple: identify, enter, manage, exit. I call it strategy creation system, SCS. And you've got to build each one of those out that you trust what's there, because if you can't trust it, you're never going to be successful with that trade. I don't care what you do.
Yeah, that makes sense. So how do you learn? How do you get to trust the strategy?
Paper trade. Hundreds and
Paper
hundreds and
trade.
hundreds of trades that you get to the point of comfort. And I tell people all the time, look, start your paper trading with just trade one contract. I don't need you to do 10 or 1,000. I've got one of my students that trades near $1 million a day in SPY and QQQ options, right? Is what she's got in the market. It's insane, right? The numbers are
Real money or paper trading?
I don't ask. We're going to call it
Okay.
paper trade. Okay.
Okay.
If you ask, now you're crossing some SEC lines in there. So
Interesting.
yeah, so we never count anything as a funded trade. And I know, because one of the companies that I taught with went through an SEC investigation. We were not found anything that we did wrong, but we found the rules of what you can and cannot do.
Interesting. So tell us about that.
About the SEC?
You were you
Okay.
were talking about the psychology there. You just
Okay. Sorry about that. But getting to the point of being able to trust that system, that is the biggest component for me, because if you can trust it and you do one contract, non-funded trade, and you do it again and again and again until you're comfortable, that you're not lying in bed at night going, I wonder if this paper trade is going to go against me, freaking out over this trade. But you've got to treat it like it's a real trade. You must treat it like it's a funded trade, not practice trade.
yeah, but you know as well as I, a paper trade and a real trade, a totally physiological difference. Your body, your mind, your emotions, your sweat glands,
Yep, absolutely.
your fight or flight response. It's a totally different experience.
It is. So if you take the one contract, feel confident with that one, and then you build it up with another paper trade of 2. And then you go a couple of days, couple of weeks with that, and you go to 4 or 8 or 10. Get to the point where you want to be. And now when you're confident on those 10 contracts there, now you can go to a funded trade with one contract only. And I want you to do it on a lower price stock. This is not about hitting a home run. Do not go after Lilly at $1,000 or Costco or Booking or Broadcom. Don't go after those high price stocks. Go after a lower price stock. Go look at heck, you could do a trade on Ford. I don't care. I want it to be something that it worked the way you wanted it to, not I made $13 on this options trade. I just want you to find stocks in a price range you're comfortable with, and you do one contract. And that's the way that I teach my students. That's the way that I've done it, is just very slowly building back up to the point of trading one contract first, going up and up and up until you get to the level that you're ready for, or you want to be ready
Okay,
for.
I get it. So what platform do you recommend for paper trading?
As much as I love TradeStation, they're not the one for me today. I think TOS is a much better platform. I mean, I love that I can call them at 3:00 in the morning and someone picks up the phone for tech support. It's fantastic.
For TOS does that?
Right. Now, I haven't had to do it in a very
Wow.
long time.
TradeStation used to be pretty good with their tech support. Robinhood, non-existent.
It's like an
Exactly.
absolute joke.
I have
When
an
they
account
first,
with them
You do.
for my
Okay.
crypto. It's just easy.
hmm Uh, so you trade crypto a little bit too. You trade
Investor.
options on crypto,
No, I'm just an
buy
investor.
and hold.
Yeah, buy and hold. I've got it. I mean, the first time I ever bought it, my friend calls me one night and goes, "Listen, you need to buy this thing called Bitcoin." Why? I'm telling you, man, don't ask, just do it. 2.5 hours later, on a credit card, I bought $250 of Bitcoin when it was $1,200 a coin.
Wow.
Yeah,
Okay. So 2017 roughly.
yeah, and I've sold it since, bought it back. I've sold
Mhm.
it 3 or 4 times and bought it back.
Right. Right. Yeah. I remember looking at the chart when it was about 950. Some person I met at a Christmas party was looking as an 18-year-old kid. I had heard of it, but I never looked at it, never thought much of it. Somebody showed me a chart. When I looked at a longer term chart, saw a big cup and handle. I'm like, well, if I'm looking at any stock, this thing's going to break out and it'll go when it breaks out.
Right.
But I mean, who knew it would go to wherever it went that time, 16 grand or something.
Yeah, that's about where it went to, 16, $19,000, somewhere in there, and
Yeah.
then it pulled back and dropped again. It's never gonna go back up again. No one's ever gonna
Yeah.
trade this again, and here we get over 100,000 this year, so
Yeah. It's incredible. All right. So you still are trading options. That's your main thing you teach. You're trading stocks, options on stocks. That's your main gig.
that's my biggest one. I'm options period, right? So directional trades, buying calls and puts, that's my bread and butter. I do a lot of covered positions like covered calls. That's retirement money. I'm a
Okay.
big fan because of tax advantages of when it comes to buying stock and the long-term hold period gets messed up if you've got a covered call written against it. Check with your accountants. But to avoid that, I just do it in an IRA account. And I don't worry about what the
Right.
stock price was when I bought it, cost basis. I don't want to have to deal with any of that stuff.
That makes sense. Or even better, a Roth IRA if you've converted.
We did. We've got one small one left that was my wife's that from a 401k she had that we've never moved over. There's almost nothing in it, but everything else has been converted to Roth.
Yeah. So you can go to ChatGPT, gang, who watching this podcast and learn what a Roth is and how to convert. But in the long run, you're going to wind up with more money in your pocket. Just math. Uh, so what is your favorite strategy now? Well, like, what is your number one strategy? Are you looking for chart patterns? Are you
So,
purely technical? Are you doing anything with fundamental?
so everything is technical for me. I'm definitely a chartist. I trade with two major indicators. The first one is Fibonacci, which I've developed many components of over the years, trade setups off of, and so forth. And I use exponential moving averages that are all Fibonacci levels. So 8 and 21 are my primaries that I use, but I don't use a 50. I use a 55. Yeah, it's you can look at the difference. I'm very much a purist, and I find
Okay.
that the Fibonacci numbers give me a better setup. And where I'm coming from with that is I back tested 4.5 million days just a few years ago now. But I back tested 4.5 million days of moving average crossovers, and 8 and 21 gave me the best results as a crossover. Now, are you going to see much of a difference of 10 and 20? No, you're not. But the big difference there is 10 and 20 were made up numbers from anything that I can find. Was, oh yeah, they're easy. I can do 10, and 20 is easier because I just double it, right? 8 and 21 have a purpose to them. They are key numbers. They're part of a Fibonacci number series. And
And
those are the
what time frame do you trade?
so my decision is made of picking a candidate off of an end of day chart, and I trade with a 5 minute as my primary and a 1 minute as my tweak. I also
Hmm,
have a 15 minute up
interesting.
on the screen as well, more of direction. I want to see is everything kind of moving in the same direction.
So you are day trading,
Right now, it's almost all day trading. Yes.
and it's the weeklies or the dailies?
Uh, as short as I can do. So if there's
Wow.
dailies
Okay.
like Fuse and Spy, we're in it because I don't plan on being in them overnight.
Right.
And
Right.
then there's my excuse of you can't. You had to get out. I don't want to hold it overnight. I don't want to
Right.
wake
Yeah.
up and there's another war
Yeah.
or something.
Whatever. Whatever. Yeah. Exactly. And something unexpected while you're sleeping, I think, is, and that, it's funny you mentioned that because like when I was I was very active in crypto at the end of 2024. And, you wake up in the middle of the night to, we're not young men. We sometimes have to go use the little room over there a couple times. You're looking at your phone, looking at crypto. I mean, I'm like, I can't do this. I don't want to trade crypto anymore. I can't be looking at it on Saturday at 3 o'clock in the morning.
I used to
It
teach futures in the evening. We traded between 8 and 10 on a Monday night, and we traded the open of the Australian and the Asian markets. And
wow.
same thing, if I've got a trade going on, you get up in the middle of the night and that phone is there to check to see, is that trade, going or
Yeah.
breaking or what?
Torture. And they've been talking about, I mean, since the 90s, they talked about 24 hours on stocks. I mean, we have the after hours market, but it's not very liquid. Do you trade the after hours? I mean, options aren't open after hours, are they?
The SPY and the Qs trade a few minutes after, but otherwise, no.
A few minutes, though.
Yeah, a few minutes, exactly.
Yeah.
Exactly.
Right, okay.
But here's the.
So go ahead.
Sorry, didn't mean to cut you off.
No, I was just going to ask. You're trading weeklies or dailies, and I heard you say SPYs. So you're trading indexes, and you're trading this individual fast-moving liquid stocks, I would imagine. No?
Correct.
Okay.
Yeah. So I love
And
the
so-
Nvidias of the world and the Amazons and Meta. They're Tesla. Whether you like Elon Musk or not, that's an amazing company to trade. When that thing moves, it moves.
It moves. And so you're trading both directions?
I do. I buy calls or puts.
Okay. Where can people find you? Like what types of courses do you have? Obviously, you teach people how to trade these options. You've been doing it for a while. You mentioned you even taught for Wade Cook before you started your own thing. Where can people find you now?
So wealthbuildershq.com is our primary website. You could find, all the information about us over there. As far as the trainings we do, we have everything from, very basic courses on how to get started, options and the likes, up to, the highest levels of masterminds and such. So we've got some very successful traders that are in our mastermind groups. And we've got beginner masterminds that we meet every month, twice a month. There's the entire course that I used to teach, not only for Wade Cook, but the other companies that I've taught for, those types of option strategies, buying calls and puts, credit spreads. We've got full courses like that online, very inexpensive, comparative to what we paid, or I paid way back when I got started with this stuff. Yeah. And but my favorite is we do a service called Power Option Plays, where twice a week I do a video training of the same 20 stocks we do every week. We've got my system, which is the identify, enter, manage, exit, using fibs and moving averages. We've got a rank and a bias on that stock. And from that, if the rank is bullish and the bias is a 1, we're looking at a trade tomorrow on that. No ifs, ands, or buts. We use Fibonacci to determine targets and stops. Not just the Fibonacci levels. We use another Fibonacci tool I've developed to tell us how far below support the stop is and how far below resistance our target is. And we're at a 78% win rate this year on those in our non-funded account, but in a 78% win rate on those trades this year. Okay.
You mentioned rank and another term just now.
Bias.
Can you tell us a little about those? Are those indicators you developed?
So it's a way of looking at this chart and ranking it to determine what kind of value am I putting on it today. So ranks, if we look at the bias, let's start there. So the bias is bullish, would be we're above all 3 moving averages. So I have 3 moving averages, an 8, a 21, and a 55. It should be 8 shortest on the top, 8, 21, 55. If that's what's happened and the stock is above it, that's a bullish bias.
Okay.
Right. So, I'm bullish. If it's between the top 2 moving averages, it's bullish neutral. I need to come all the way up above before I can take that trade. Got it. It's down lower, it's neutral, and then we do the exact opposite on the downside for the bearish and bearish neutral. So that just tells me if it's bullish or not. I can get a pretty quick look at that. If the stock's going up, it's bullish. Sure. The rank tells me if it's a rank of 3, we closed nowhere near nowhere near a Fibonacci level. And we were kind of in the middle of our fibs. It's not near anything. So there's no trade set up right now. So it's a rank of 3. So in other words, it's bullish with a rank of 3. I don't care. Rank of 2 said we closed near the Fibonacci level, but there's no moving average there. So if I looked at taking the trade, it would be on a smaller scale. So instead of taking, let's say your normal trade would be $2,000. That's what you normally put into a trade is $2,000. For that trade, I might put $500 into the trade because it's not perfect. A rank of 1 says the moving average is sitting close to the Fibonacci level. We're in that bullish bias. If that sucker pulls back tomorrow and bounces, we're taking that trade. And that's the trust of my system works. That's the trust you have to have.
Are these indicators mathematically calculated, or they're not subjective, are they?
So bias is pretty straightforward. Is the stock above the moving averages or not? So there's no real math in there outside of where it sits in
the yes or no, binary. Yeah.
Right. Absolutely. Rank, yes. So to put it in the easiest way I can say it is if you took any two Fibonacci levels, and let's just say the difference between these two levels is $4. Okay. My stop, right? I'm sorry, my rank is going to be based on how close to that Fibonacci level is it. If we're within 25% of that Fibonacci distance to that line, so $1 away, it's a rank of 1. If it's up higher than that, it's not, it's in the middle. And as far as I'm concerned, it's a rank of 3. Does that make sense?
So there's math to it.
A little bit.
It's not just like your judgment and all kind of subjective and willy-nilly. You're a systems guy.
Right. I can't teach that. If I show you that, you need me to do it for you for the rest of your life because I'm the one making the guess or the judgment on it.
Yeah. And that's just that whole concept in and of itself, I think, is an issue these days because you got a lot of folks teaching having these live trading rooms, and there are people just copying what the guy's doing, and these copy trades. They're not really learning how to trade.
Correct.
It's kind of the problem of the holy grail. A lot of newer traders, and unfortunately even experienced traders, are looking for the holy grail. They're looking for the ATM machine. And instead of really learning how to trade and a strategy that they can own and do themselves, it seems they're looking for somebody else to tell them what to do, and then when it doesn't work, to blame. Have you seen this?
I have. I'm a big fan of give a man a fish, you feed him for a day, teach him to fish, you feed him for life, right? In the meantime,
Exactly.
Yeah, I'm going to give you some fish. I'm going to teach you how I find the trades. I'm telling you what trades I'm looking for every day. We do it every day.
But then there's, reverse engineering. So I believe in that too. And so like I teach trading, company called Easy Breakouts. And I put up a list of my top 10 picks every day, stocks that are on the verge of breaking out. And what my theory is very similar. Like I give them the trades, but I want that people to reverse engineer why I'm picking these stocks. I teach people how to scan the market. I teach them how to trade it. But I think reverse engineering, which sounds like what you do, you want to think through it. You don't want to just be dependent.
Correct. I don't want to be that voice. Hey, maybe someday when I'm 90, I want to retire, and you're going to need somebody to give you answers then if it's not me. And I don't want that. I want you to be able to do this on your own. I want you to stay in my programs because you love being there, not because you're dependent upon me.
Right. Awesome. What social medias do you have?
So
where else can people find you if they want to see like your videos? Are they on the website? If people just want to check you out.
So some of the videos are on the website. In the upper right-hand corner, there's a WBHQ TV. So some of our YouTube videos are there. You can go to our YouTube channel. We've got over 1,000 videos up on our YouTube channel. We do a free service that we send out called Trade with Rob, where I analyze one Fibonacci trade that I do. We do 3 candidates. I try to do it 2 or 3 times a week based on what the market has. And it's free. We just send you an email that says, hey, all of this is done. And we put the video up on YouTube and I show you where the entry is, the exit, the targets, all of it. And it's a switchback trade is what it's called. It's basically, I don't know where it's going, just go. If it moves one direction or the other, I've got an opportunity to take a trade.
Awesome. I'm going to put those links in the description. So, gang, you want to check out Rob's stuff, definitely click on those links. I'm going to check it out. Sounds awesome. What do you think are the biggest mistakes that traders make over and over again that you've seen from your own students?
So I think some of it is trying to go too fast, trying to feel that this is something that I can do, get rich quick. It's not. It's get rich steady. It isn't about quick. This is about taking your time, going through the process and learning it. It's not the destination, it's the journey. How do you get there? The reason, look, when in 1990, not 97, but early 2000, I was teaching for another company and we were trading what we call chicken trades, right? It was just a strangle. You bought a call, you bought a put on an earnings that was coming up. And if you paid $2 for the call, $2 for the put, the stock would explode one way or another. One option would go worthless. As long as the other option was worth more than you spent, let's say $4 on the two options together, you made money. And it was a great strategy. And then it stopped working. Why? Because market makers figured it out. They increased implied volatility right before earnings, and they would crush it right after earnings. And your $4 options were now worth $2, even though the stock moved $30.
Right.
So, but that program, that system had to be changed. You had to modify and go with the times. And you've got to be able to do that as a trader. You've got to be able to spot that things are happening and make those adjustments, those changes along the way.
Interesting. So the mistake is that people don't realize they get stuck in a strategy and then they wonder why it stops working.
Correct. They go too fast at it where they're throwing real money at it today. Or they get trading something and they never adjust anything. It just starts going against them, and it's almost to close your eyes and hope it gets better.
Right. Can you tell me one of your favorite client stories?
So there's a student of ours, his name is Roman, and he came to us through another company that we had partnered up with, a good friend of mine. And he had been with them for a couple of years and had done nothing as far as his ability to trade was not there. He wasn't able to do any trading. Roman came over to us and he and I get on a call one day and he goes, okay, what platform are you using? I said, TradeStation. He said, how many hours a day do I have to spend on it to learn it? I said, Roman, if you can give me an hour a day to learn how to use it, you'll pick it up in a couple of days, couple of weeks. You'll be a master at it. He spends 8 hours a day for the next 3 weeks in TradeStation. He knows more about it than I do. He was a real estate investor, flipper, and all of that. And there are times when that market is just not the right market to be in. If you've ever done any real estate,
like any market,
like anything else, right? And he is completely turned around to where he's from Ukraine. He teaches some of the migrants from Ukraine how to trade the market on the stuff that he's learned from Wealth Builders.
That's awesome. That's wonderful. Awesome. People who have made it here with what's going on.
Exactly.
That's awesome. That's a feel-good story. Well, Rob, I really appreciate you coming out today. I think this is a very interesting conversation. You definitely want to check out Rob's stuff, wealthbuildershq.com. Did I get it right?
You did.
Perfect. There's going to be a link in the description. Check that stuff out. Robert's been at this for a long time, and options are tricky. I mean, there's so many different option strategies, and it's easy to get really confused very, very quickly. I mean, even when I was a stockbroker, I remember just trying to wrap my head around all the different strategies. You got to start at the simplest point, gradually build on it. And Robert really has a real strategy. In fact, the strategy that I'm hearing you talk about, Fibonacci levels along with moving averages, this is not the first time I've heard this type of strategy. And it sounds like you've injected some of your own experience into it and your own system. So definitely worth checking out. Robert, again, thank you so much for coming out today. I really appreciate you.